This is Matt Shaw, Chief Analyst, Knightsbridge Trading Academy. Trading video number 27, the dollar-yen, descending triangle, potential signs of a collapse. Okay, now I'm looking at the dollar-yen primarily for this, and it's a great example of a descending triangle that I want to go through. First of all, we've just seen this gap open on the weekend of the 20th into the 23rd of October, and for me this is sometimes what happens when there is one last leg up, and it's happened notably in many times of in past cycles for the stock market, currencies, and also commodities, most notably going back to the Dow Jones, year 2000, 2007, and also before a small flash crash in August 2015. And for me, it's already showing signs that it's exhausting itself, the dollar-yen. But what's drawn my attention on the weekly chart is a very apparent descending triangle. Now, right here is where we can see this most obvious. In the past few weeks, actually scanning back all the way of this year, because we're on a weekly chart. What I mean is we're going back a few weeks just to get this final burst and test outside the barrier of the upper trend line of the descending triangle. But let's zoom out, I should say, of this and look at where the markets come from, what's happened. Let's look back at the history. Remember, we go back and look at the history of a chart and see the reasons why it's moved. Now, back in 13-14, we consolidated pretty much to the end of 2013 after rallying up very nicely, the end of 2012 into 2013. Remember, we're looking at a very long-term time frame here and for a potential longer-term trend or longer-term break. So this is why I'm going back longer on my chart to assess this and why it's happened. If I was on a daily chart, I'd only go back a couple of months, but I'm going back a couple of years because we're assessing a weekly chart. Now, this seemingly topped out early part of 2015 and sold off dramatically in the build-up after it bottomed out, in the build-up to, well, Brexit and also the Trump election. Now, this was where the fear really kicked in, sort of April, May, June, July, and August, consolidated through the summer, as it can do most summers, and really formed a bottom around 101. And then after Trump actually got elected, all this fear mongering beforehand. But what happened after he got in? The Dow also rallied, U.S. Equities and also the dollar itself, and this is what gave it the leg up. But it very much consolidated and found its lows here before. And it is, of course, a higher low from where it was previous back in 2012 into the late stage of 2012 before it rallied. Now, what's happened here, once it's made this high, it's now tapered off again. But the high it's made, even though it made a higher low, it's made a lower high from here. So now we've got that sloping channel here. But if we go and zoom in to the current trading period, the more up-to-date trading period, we can see here not only has it not made these past highs above 122, 123, 124, it only reached just above 116 and it's sold off. And over the last few weeks we can actually go and extend this descending triangle more if we like, up to here. We can take the actual high itself, and you can see we've pretty much got two triangles in one. Now we can pick and choose here. We've got either these previous highs that are sloping, as you can see it's a perfect slope right here. We've just peeked out of it here on a candle this past week, and again sometimes one last candle does peek out of the top or the bottom, just like you can go back here and check on the chart. And we zoom out, I mean, for instance, you could say 101 was the actual bottom here, there, 101, but look, it just pipped below 101 to sort of 150, 100, actually it just peaked below 100 just like 99.8. So it actually dipped nicely below 100, tested the waters below sort of 99.80, 99.70 before it rallied higher. So 100 wasn't the exact bottom. And this is what happens here when testing these support and resistance levels. The triangle here coming down, which is my favorite of the two triangles here, purely because it's a perfect sloping high each time. We've just peaked out. Now, if it does this, this could go on and test the upper boundary of this previous high. Still, it's a descending triangle because we've got the base going across here, and the base was purely formed from the fact that the market sold off aggressively through here to make a bottom in 2016 and aggressively rallied up through here, and has also bounced off at least twice, which is confirming that there's a base in play, and it actually tested it pretty much there on a weekly basis before it rallied up from that lower level in the middle as well back in May, and again bounced up well, not perfectly, but as you can see, pretty much spot on again, just tested the waters below and then headed higher from there. Now, one of two things is going to happen. The weekly candle, I should say, will just test the water, stretch its legs above this lower descending trend line here, and then head back below. This will be its last, remember, like the doji star, that just last gap up before it really sells back down. Or again, it will just go up, stretch its legs, and test the upper trend line of the descending wedge itself, and then head lower. But for me, it doesn't make sense to go and test this upper one here, purely because this is in sync, heading lower, and this will just peak up above these previous highs. The lower previous highs, again, each high is lower as it goes down, and this should then come off nicely. It's taken so long to set up, it's taken all of this year, but it comes and stems from this lower high, which is crucial because you've got the ultimate high here above 125, heading towards 126, or just above 126 actually, and then sell off, peak up, not as much as this, maybe just barely 50% more of this sell off, and then heading lower. But this channel here has been perfect all through this year, and it's ready then now really to drop. You can see it starts out the opposite of an ascending price pattern. We've pretty much got a very wide start here from the high to the low, but then as we go on, it just gets narrower and narrower, and these moves get more condensed like a coiled spring. You hold it down for so long, when you release the coiled spring, the effect is much more explosive, and this is what's going to happen here. I see price movements getting more and more contained as we go forward into the next couple of months, maybe into the new year, early 2018, before it then just gives way and just sells off. And I think this could sell off way below 105, maybe below 100, and well into the low 90s, well into next year. That's a potential forecast. Again, if it breaks out and it's above 118, 120, then I'll be proved wrong. But it's all about knowing a descending triangle, and these are signs of a potential fall. And this does give me either one option of this tighter one here, or the looser one, I should say, but still very tight, as it gets narrower and narrower and narrower going forward. But it's either one of these two will hold, and only time will tell over the next couple of weeks. This is 24th of October 2010, sorry, 24th of October 2017, but we shall see going forward. All right, thank you very much, guys. On to the next video.